So let's look at what this actually looks like on the charts. Now we're going to look at pretty much the same price action and trade examples that we looked at in the earlier lesson, risk entry versus confirmation entry versus double confirmation entry. So I won't spend too long breaking this down and kind of just try and get to the actual point of this lesson, right? But essentially, daily time frame is bullish. We are currently in the daily pullback phase and we haven't quite yet reached daily demand. So there is, reason to believe that we could push lower. There are calls for lower prices. The 4-hour chart is also bearish. We can see, right, clear bearish structure with a lot of momentum to the downside. We came up, we tried to break higher, but it ended up failing to close above. Okay, so structure remained bearish. Looks like it's just going to be that big external range liquidity sweep, right? Sweeping the liquidity behind the swing high. And you see the nature of that, right, with that big push down. And then you can kind of see that sustained internal bearish order flow, where currently we're having a little bit of a reaction off the week low. But when that happens, right, we just expect it to be what? We just expect it to be a reaction point for a pullback into supply to generate more available sell side liquidity to target, because order flow is bearish. So we expect it to just mitigate supply, right, and then continue down if that order flow is to be sustained. So then if we jump down to our M15 time frame, now we're going to be looking at this through the lens of an M1 or an M5 trader. So the M15 time frame is your medium time frame. Okay, so this is your trade ideas. This is your POIs that you're looking to trade from. Okay, in this instance, the M15 swing structure was actually quite large. Ends up being the same range as the 4-hour chart. So that was our swing high all the way up here where we failed to close above. And this is our swing low all the way down here. So when you get big swing ranges like that, this is when mapping our internal structure can become super useful, right? And we can see here, after we had that big initial sweep, we had a big pullback, right? Giving us our internal pullback. Then we eventually broke down and closed below that low. So we got that internal range. Then we had another internal pullback into that 4-hour supply, that 4-hour doji, which we can see with that supply range there, right? And then we had another internal break of structure to the downside, and we haven't quite taken out that weak low yet. So at this point, we now have our new internal range, right? This is our strong internal high and our strong internal low, right? So nice simple structure, or somewhat simple structure, whereby our M15 internal structure is bearish, our swing structure is bearish, we've pulled back up into premium supply and we're expecting that low to go. Now, when you have big swing ranges like this, like it's obviously pretty damn large, and then within that, you've got like quite big expansive internal ranges as well, like that's one big internal leg there, you can have almost internal price action within the internal price action, right? So we call this, for lack of a better name, the smaller internal structure, small internal structure, okay? So you've got, let's say, your larger internal range, okay? And then within that, what do you have? You can see how we have that smaller internal structure, and it's just the same thing. Why does that small internal structure shift bullish? It shifts bullish to facilitate the larger internal structure pullback, right? So we can just use that to our advantage, and we can map that. So hopefully you guys should be somewhat familiar with this anyway from the previous example, so I don't want to spend too long talking about it and kind of just get to the key point of this lesson. But remember, we came into our refined M15 level, which was high probability, right? It was the flip that swept liquidity and it had inducement. We built strong liquidation with the fake break. As we can see this high here, what did it do? It broke that low, it caused a chock, generating that available strong liquidity behind the high, right, which was then used into that POI, and then we got a shift. So not only did we get that nice strong liquidation into our refined M15 POI when we took out that high, but as you can see, that clear small internal structure within here has now shifted bearish. We've got a break closure below that low. So if you're looking for this larger internal structure up here, right, this big leg in price action, for this pullback to now be over and target this low, we have really good confirmation of that, because this small internal structure has now shifted bearish, right? If I map out those last two I bosses, or some people like to call those I bosses, right? So just quickly talk about this. I'll show you this now, if it helps you to kind of get your head around this, whereby this is your I boss, right? Because that's essentially your initial internal structure. So that's your range. And then within that, you've got the internal structure. So you might want to refer to that as your I boss, just if it helps you, okay? Cool. So if we're looking for shorts, in theory, this should be really high probability now, because we have everything aligned. Swing structure is bearish, the larger internal structure is bearish, and our smaller internal structure has now shifted bearish. So this becomes our strong high, right? So now what we can look for is price to pull back in. That should be a high probability area to look for an internal lower high to then target the lows, right? We have everything aligned. Happy days. So if we want to look for a short entry, what do we have? Well, the extreme is already mitigated, okay? We've got a decent tap into it. And of course, price could push a little bit higher, but let's focus on the unmitigated next candle along, and that would be this candle here, which also flipped this level here, okay? So this is looking like it's a pretty high probable POI, right? It took out the point before the liquidation up here has been taken out. Internal structure shift in our favor, so this becomes a level in which we want to look for. So like we spoke about in the risk entry versus confirmation entry video, this is the type of POI in which I would consider a risk entry because you have everything aligned. It's pretty much the unmitigated extreme. Like this level is going to have to hold, or maybe up here, but this is looking like the high probability one, right? It's the unmitigated pivot supply for this movement to the downside. So these are the times in which I consider risk entries. So if we jump down to the M1, okay, and I already have it mapped. That's your refined extreme problem within here, because remember, if you're going to be looking for, entering a risk entry, within the POI and not at the extreme, I want to see something very clear. Like I want to see, so you've got demand, I want to see price come in and sweep liquidity, ideally mitigate another range there. So you get a sweep and then a push down, and then perhaps I would consider, set my risk entry below. But for the most part, if there's an unmitigated extreme, that's the one I'm going to focus on because that's going to be the highest probability. And as we can see, that POI also swept some really nice liquidity there as well. Okay, so that would be your risk entry. Now, what was the purpose of this lesson? It wasn't to do a full trade breakdown, but I thought it was useful to go back over that anyway, because there's a lot of key lessons there to really drill in. But if we go back to here, all right, if we talk about this scenario, which is when do you cancel your order, and if you have on your trade plan, when your medium time frame POI has been mitigated, you should cancel your order. So if we go back to the trade example, let's say we put our order on now, right? We want to set this risk entry in here, stop behind the high. Happy days, we've got at least 5R to here, but really the trade idea we're playing, again, we'll talk about management later, but you can, you have more than enough logic to target this week tunnel low and even the week swing low, okay? So there's a big trade there, a lot of RR. So when to cancel your order? Well, like we said, if you just have it on your trade plan that says when an M15 POI has been mitigated, well, then if we look left, where are we? We're in M15 demand, okay? And it's a pretty decent level of demand because you can see it, it swept this liquidity that broke the high there, right? So that's a decent sweep zone. A lot of momentum came into the market, a lot of demand when that POI was created. So perhaps, this could be a move that pushes price up a lot higher. Technically it's flipped, it's a bit of a messy one, but it flipped this big wick here. Okay, so you can make sense of it, right? It's somewhat of a decent POI. But remember, this is the key thing. When price mitigates a level, always ask yourself, what is the expectation, right? And what I mean by what's the expectation, what I mean is what is the primary idea within our framework of what we expect the reaction from this move to be? Do we expect this movement, or is it just a reaction for a pullback to push lower? Well, how do we know? Well, look at structure and order flow. Order flow is bearish, right? Internal is bearish. The smaller internal structure has now shifted bearish. Order flow is clearly bearish. So at this point, our primary expectation that it's simply just to provide a reaction for a pullback into supply to generate liquidity below that week low to push prices down lower, okay? So like I said, to get really to the purpose of this lesson, if you're setting a risk entry and then you see an M15 mitigation, do you want to cancel your order? Well, in this scenario, I would say no for the most part, because we just expect it to be a reaction point to come back and fill you in and push down lower. So we shouldn't be too concerned about that, right, for the most part, especially in this scenario, we have everything aligned. So this would be a scenario in which I would say it makes sense to leave your order on, okay? Now, as we come into this level, could you potentially look for a quick long on the M1 to play the pullback? Yeah, of course. So let's jump into that and look. Now, I'm not saying you should take this because I don't deem this to be high probability, right? This is, like I said, against everything. It's against order flow, it's against swing, large internal and small internal. We've mitigated the extreme, we've had a strong liquidation, it's 4-hour supply. So I would not personally take this trade, but it's just to talk through. It's a good learning point to it's good information to understand what's going on here, right, within the frameworks that we use if you wanted to trade this way. So, sorry, I know I'm jumping around here a bit. So if we're looking for a trade within here, it's just an aggressive trade to play that M15 internal pullback into there. There's no inducement in the M15 leg. So if you're using the liquidity entry models, what would you need? You would need to see strong liquidation built to the right, okay? So as price comes into our POI, just waiting for strong liquidity to be built, and we've got those nice equals building, okay? So we can mark those on, and then we can use the liquidity entry model, I believe it's 2B, right, with the equal lows, and we can look for that to get liquidated. Nice liquidation, nice V-shaped reaction. Where's the point before the liquidation? The nearest supply zone would be there, so that has now failed, right? The supply that causes liquidation, happy days, but we don't yet have the chock. That would be the chock there. So if you need a chock in your plan, you need to wait for that to go. So let's be patient, and then it goes, okay? So now you've got your trade, and you can look for there. You might want to cover the stop loss below there. Then you've got a pretty big stop loss, and then you're already trading a super aggressive trade that's low probability and the risk reward isn't there. So, but let's just imagine you were, okay? This is not a trade I'm advocating, but it's just to kind of talk through the point of this lesson, that if you wanted to take this entry, let me play the price forward a little bit. okay, and then you're not getting tagged in, ask yourself, what was the objective of this trade? What is the trade idea? Well, you're playing the M15 internal pullback, right? You're playing this little movement here into supply. Why? Because yes, you're trading an M15 POI, but the expectation is just to play the M15 internal pullback up to here. So like I said here, if you're playing this movement where prices come into your M15 POI and you haven't been tagged in and price has now pulled back, well, at this point, that reaction has done its job. The objective is complete. So now if you leave your order on, you're trading from a weak low against supply, against order flow. That is exactly when you want to cancel your order, okay? So literally those sorts of aggressive moves when you're playing it, really ideally you kind of want to just get tagged in straight away and then you can remove your risk or take your profits. At this point, as we pull up, especially as soon as we get that mitigation, bang, cancel your order. You don't want to be getting involved, okay? And then with the one with the risk entry up here, you do want to keep your order on, like I said, because we expect the reaction from this demand just to be pulling you in, okay? Now, there may be some scenarios where, you get a strong reaction from an M15 POI and you don't like it and you want to cancel your order just because maybe the high time frame idea isn't quite as aligned, right? And then you might want to, wait for a little bit more and you might want to wait for a confirmation entry from within here. But in this particular scenario, everything is aligned, right? We've seen everything. 4 hours bearish, M15 is bearish. We've pulled back up into the internal, with the refined M15 supply within here. It's super high probability. We've had the strong liquidation. We've had the internal structure clearly shift bearish, a lot of momentum. Like we've got the flip, the PBL fell, supply chain, everything's here, okay? Literally the only thing this POI doesn't have, it doesn't have any inducement and it didn't technically sweep in this time frame, right? But other than that, pretty much full alignment. So this is the exact scenario in which I would say, yes, after M15 mitigation, you still want to keep your order on to see if you get tagged in, okay? And eventually you do, and if we play this fast forward on the M15, we can see how that plays out, okay? So hopefully that kind of can really help you to give you a sort of mechanical method to know, when to cancel your orders or not. That was kind of just focusing on an M15 mitigation. And you see here, we just come back up, right? We follow the order flow into that M15 flip, that swept liquidity, okay? So look at that reaction from demand. When order flow is bearish, we only think it's going to be reaction point to facilitate the pullback. Then we push down. So we have a big flip, swept liquidity, right? Price comes in, and there you go. So let's quickly talk about the other scenario, which is, at what point on a lower time frame, if you've waited for confirmation entry, do you cancel the order if you don't get tagged in? Because this is another one that can be, a little bit subjective somewhat. So let's go back to that same idea, that same trade idea. If I just scroll back on here. And let's use a little bit of our replay, because this is actually another good example of where we can look through the liquidation entry models on the lower time frame. So if we are trading from this M15 POI, right, and it doesn't have any inducement in the leg, and you want to be super strict and you want to wait for a strong liquidation on the M1, then that's what we need to do, right? We need to wait for strong liquidation. So let's see if we can get that fake break, okay? Nice break of that low. So that's definitely what we're going to be looking for, right? We want to see a liquidation of this M1 high. Okay, so we get a liquidation of the M1 high. We've now hit our refined M1 extreme, but if you want to wait for the confirmation entry, what do you need to see? You need to see the PBL fail, the point before the liquidation. There's a demand that caused the liquidation. Okay, so we need to see that go. Why do we need to see it go? Well, we want to know if BFIs have used the available liquidity behind this high, and if the way that we define that is if they entered, right, enough sell orders to overpower the demand that caused the liquidation. In this case, as you can see, that demand is held and we pushed up higher. So now, if you want that strong liquidation, you need to wait again. You need to wait for new strong liquidity to be built and swept, okay? So basically, this no longer becomes relevant if you're looking for that liquidity entry model. You need to see it be built and swept again. This is a weak high, hasn't achieved anything, so nothing going on, so you would just be patient, okay? So now we get a break, so potentially this high could be used for that liquidity, right? Because that high has now broken this low here, okay? So perhaps that's generating available strong liquidity, which has now been taken, okay? So where's the PBL? This one depends on how aggressive you want to be, but if let's try and be super mechanical and always hit the nearest. Technically, that would be the point that actually broke the high. So let's see if that goes. Okay, and then it's held and used. So in that instance, that you would say that hasn't been used, but maybe you want to be a little bit more conservative, okay? Because, again, how good the trade idea on the M15, it's really, really good. We've now literally mitigated the extreme, and this level here has now failed, so perhaps that would be good enough for you. For me, it would be. So then I would look at setting my entry order up here on this level, right? That would be my confirmation entry. You might want to be a little bit less refined, okay, because that thrust candle closes below both those candles. And for me, that is a very high probability M1 confirmation entry, especially considering, right, that the overall hard time frame idea. And there we go, right? So that would be my confirmation entry. And now I set my order. So again, what's the point of this? We're talking about when to cancel your order. So we pull back a bit, we react to demand, okay, and then we push down. So you've essentially got potentially an aggressive continuation there, right? You've got a mitigation and you've got the flip, but the flip didn't sweep any liquidity. So I personally wouldn't be too interested in that. I'll be looking at this. Price comes in, mitigates that. And now, so this is when I'll be thinking, okay, like if price is going to come back, we've kind of already had the move. It's going to have to break all of this structure to get back to me. That's when I would probably start thinking about canceling your order. But so this is this, right? Where, you've initially had the break here. You wanted to get tagged in, but prices then continued and had bullish order flow. So for price to get back to you, what does it do? It has to break all of that structure, right? If I quickly flip that upside down so you can visualize that. All right, price is down here now, so it's got to tag you in. So what you can do is either leave it, that's up to you, or you can wait for a bit more confirmation again from that level. Okay, it's totally down to you what you want to do, and that's where there's a bit of subjectivity involved. And also, what I would say, as always, it depends on the higher time frame idea. Because everything is aligned on the higher time frames, this is where you may just want to be like, do you know what? I'm just going to leave it here. It's at the extreme. If I get tagged in, it's worth the risk, right? And other times you might not be so keen on the higher time frame idea, and that's where you want to be maybe be a bit more aggressive and leave it. Because now at this point, right, we're coming off the low, perhaps we're ranging, and then that's when question marks can come over. Is like, is this high now weak? Right? Because it's failed to do its job, it's failed to break that low. But again, this is where I would, because of this particular hard time frame setup, like everything's so aligned, that's where I would say it's just worth leaving your order on if you liked it. Now, spoiler alert, unfortunately, in this particular scenario, it never quite pulls back. It drops around the middle of range because there was high impact news coming around 1:30, I believe, and there was no entry order. So yeah, there was nothing that meets my plan here. And then, when the news came in, we swept the liquidity behind those highs and then we melted. So in terms of getting in on the M1 confirmation entry, that was the only setup that would have met my plan, and it ended up being a no tag. So yeah, typically if price does something like this though, and it comes all the way down here, I would not leave my order on, especially if it has to come that far and it's coming off this M15 low. Like I would just wait for price to come in and give me that next confirmation entry. But in this very specific scenario where literally everything is aligned, like I keep saying, I would consider it leaving on because, I just want to get in. But yeah, so great example of where risk entries are worth taking here, because the M15 is so good, and that's where you just want to leave that on and let that play out, and then you could be in that trade hopefully, and hopefully you wouldn't have got stopped out with a high impact news, and yeah, you'd be in a beautiful trade there. So hopefully that can kind of really help you with knowing when to cancel orders. For the most part, when M1 has to come, or my lower time frame has to come a lot further back to take me in, I do consider cancelling it. But if you love the medium time frame idea, then maybe you just want to leave it on, right? Because it's the medium time frame idea, you just want to get in, right? In these scenarios, if you're shorting from here with a risk entry and price has mitigated demand, then it's okay to leave it on. Why? Well, order flow is bearish, so we expect it just to react from demand to tag you in. If you're trying to get in long here and you're not tagged in, you want to cancel your order once price mitigates here, because now you're trading against order flow from a weak low, right? You were trading the pullback, that objective is already complete, so get out of the trade. Okay, cool. Hopefully that really helps you to